Good evening, all. Ira Epstein, and this is your weekend edition. And I know you're going to say, Ira, it's Thursday. What do you mean your weekend? It is your weekend edition for your SPDR ETF stock market wrap-up, where we're going to look at weekly, not daily charts, because there's no stock market open tomorrow, July 4th, and happy holiday to one and all. Now, we're going to look at a new chart on AstraZeneca. And we'll talk about this in a minute and what the chart action looks like, why I picked it, and we'll take it from there. But as you know, the stock market took off again today, did exceptionally well. So far, the Golden Cross is working out in the SPY, which gained today another $5 a share. You can see Amazon up, a number of the stocks just playing back and forth right here, and you'd expect that. This coming week, you're going to find out about tariffs. Now, let me explain tariffs in politics before we get too far and go into charts. The government is saying that the tariffs are a one-off hit for inflation. And I argue that point. It depends what you mean by it, and let me explain. You and I go into McDonald's and we buy a combo meal. And it's $9. And then they decide, they're going to get $10 for the same thing. Is that inflationary? Well, you're paying 10% more. Is that price dropping from there? No. So what the government says is because they raised the price of McDonald's, the burger, by just $1 and it's going to sit there, it's a one-time bump. That part is very correct. They only bumped it up one time. We don't know that there won't be other price increases down the road. And it's not too often that these companies, once they get a price up, that they want to break it down. You agreed? I mean, think about that. So it's a one-time inflation bump, and I get that argument. Where I don't get their argument, and I think they're very wrong, is it doesn't go away. So now I'm stuck in my pocket paying 10% more on top of whatever else occurs. Because when's the last time you saw your Starbucks drinks fall in price? I'm not a Starbucks guy. I think it's crazy to spend that money for that coffee. But I went out and I bought Dunkin' Donuts. And I haven't bought a Dunkin' Donut 3 years, 4 years. Got to be that. I didn't even know what the price of a donut was. And I'm asking the manager, how much is it? And she's showing me. And I'm going, God, I was paying 50 cents, 60 cents on a donut last time I was in the store, and now they're close to $1. And you don't think that's inflationary. And you don't think that with that example I just gave you, if the new base was $1, they're not going to go to $1.10. Their rent's going to go up. Their insurance costs are going to go up. Don't buy into that. It's a jump that takes your inflation higher, but it's not a one-time. It's a permanent jump in it. In many of the products. Now, there are products where it isn't. TV sets continue to fall. They're commodities, all right? So the new technology drives the old technology sets down. That I can go with. But a lot of these products, no. You buy a new car. When's the last time you saw new car prices fall? New car. They'll give you a special. You get your employee special and so on. It's a bunch of nonsense. That's the way to look at it. What's not nonsense before we get going here is the 4th of July sale. Let's assume I give you one idea in a stock and that pays off. Now, $95, you're going to get approximately 25 videos a month, each 15 to 20 minutes long. I rotate what's in the videos, different stocks. You're able to even write me. I'll create sometimes a private video for you if you have a question on the market as a paid subscriber. You get that. Special report access. So you're going to get 25 of those for the grand cost of approximately $8 a month. 25 videos, what's your effective cost? If that doesn't make sense, something wrong. If you think I'm a good technician. If you don't, I get it. If you want to learn my technique, my courses, they're normally $600, $120. I've taken the prices all down for you. So 40% savings. And here you take the course when you want. You may want to say, I don't want to take it to the end of the summer. Terrific. Buy it now. You tell us when to start it. These you go with as they come in with. I happen to love the combo for you, and the reason is so many of the ETFs and SPDRs are based on the futures. You'll see the icons up here. If not, just go to iraepstein.com and take it from there. Okay? Now, there's no big economic data coming out tomorrow. Tariffs I want you to start thinking about. So AZN. AZN is in a possible position to buy into Summit, I think it's Technologies, a oncology drug, a cancer drug. And it's very promising, and they're talking this thing could be worth billions in North America for whoever gets the license with them, but it's not done yet. So I don't think they're going to spend that kind of money up front to do something that isn't proven. But I do think it's an opportunity for Astra to be able to get into the game. And everybody's always looking for a new drug that can be a blockbuster, especially one far along in the development cycle, which I understand this is. So throw that off, you now know the story. Do you see a pattern here? Well, I see the potential of maybe higher lows, higher highs, but let's put the swing line on it. No, we don't really have that, do we? That's what I love about swing lines. You've got lower highs, and with this outside weak to the downside, you've got lower highs, lower lows. Now, when you take out this week's high, you got 2 weeks to do it. That could set the market into what I call a bear trap. But until that happens, where are we going? Well, we're fighting a battle, and it's ultra clear. You're fighting the battle at the 18-week average of closes in red. The green number is the 100-week average of closes, and the gray, if it gets down there at 67.81, is the 200-week. The Bollinger Bands, where the market trades within them 95% of the time, are not narrowing in very much yet. They've still stayed pretty far out here. The market had run, in fact, let me do it this way. The market had run from a peak on the downside, back to the upper band, back to the lower band, and it has been stuck now, not wanting to go to any band and hanging around this area. I like that. Number two, Starbucks. Let's keep going with this. It's trying to clear these moving averages. Remember what I told you. If it can clear those, the odds are going to favor this market's going to try to get to the Bollinger Band, but that band's going to fall. The way this is going, because of all this tightness in the market that's happened, this band's going to collapse like that. So there's more to be done here. It's not, in my opinion, not going to be like Dutch Brothers was, where it just runs. But I do think a bottom of very big importance has been made. Have you been looking at the price of coffee futures? They've been cracking down. They're down 25, 30% from their peak now. That's going to play into them. They're getting smarter under their new CEO. They're talking of closing the Chinese stores. What do they need them for? Sell them. Get the billions maybe that you can get out of it, and get your product line down and get back to speed and get back to being the place people want, not the place people have to sit there and get frustrated waiting. Restoration Hardware. Okay, we've narrowed ourselves into the 18-week average of closes in red. The Bollinger Bands are doing just what they're doing in Starbucks. They're narrowing in. We have a number of markets that haven't joined the hit parade, like the tech stocks, that have gotten to the point where maybe they're through on the downside, and soon they'll be worth looking at long term. In Netflix, you still have your bullish embedded reading. I wouldn't back away from that. For the week, you were down 2%. Most people don't realize Netflix is down. I get people that will write me, look at that Netflix going. We've had a phenomenal run. Do I think it's over? Not by a long shot. I love this company long term. But I think it's moving in $50 increments and getting up like you did this week near the 1350 level, 1341.15, and now you're back to the 1297. Maybe the market slips. Now, on the daily chart, the bigger support's in the 1250 area. We'll see what the market might want to do. Lilly reminds me of AstraZeneca, sort of hanging in right here. It's not popped yet. If you can get over 802.50 on a close, you could get that pop. I don't think it's going to go very far. I think the Bollinger Bands are going to fall from here, but $100 away is that upper Bollinger Band. That'd be a nice gain. That'd be an 8 to 10% gain. I would take that because the number's going to slip. Remember what we talked about in Home Depot, saying that I think back here was the end of the decline because of the momentum and how you turned up. Then we started seeing the wrapping, just like you're getting, of these Bollinger Bands right here. And then we got to the point where the 18-day average went down and kissed. The 18 kissed the 100-week average, and the market got over them. I think the worst is over for the market. I think that they're going to find that we know what our numbers are out of China, that products are bought. I think Home Depot on other markets will know, gee, because they diversify. What is the cost of a tool or products or whatever they need? And I think that you're in the recovery stage there. Uber, I'm just plain bullish. I realize you're overbought. I'm not saying to deploy new money in it, but my subscribers know where they're at in the market, and it's back over here. It's really closer to that. And I'm looking at the market and just saying, okay, what I think you had to do is take some money off the table up here. Got to get onto more or less their money as much as you can, cut your position down, and now we wait and see what autonomous driving is going to do and how things are going to play out. That's where I'm at on that stock. On ET Transfer, this break took me out of the bullish camp, and now I'm waiting to see, can it restructure? It's trying to right now, but it's too overbought on a weekly chart to get at least me excited. The trend has got higher lows, higher highs. The bias is up. It's overbought. I'm certainly not in the bear camp at this point, and that to me is important to know. In XLI, well, why wouldn't you be friendly industry? We're going to know what the tariffs are. We've gotten the tax bill. We know that if you're in industry and you want to go out and build a big plant, the president says go on and you can take all your deductions right up front. He's making this very business friendly. And that is friendly for that. And he's won. End of discussion. He's won. His loss we won't know for a couple of years. Why? If the growth doesn't pay for this spending, he's going to bury us because we're picking up 3.5, maybe 5 billion in added debt. The numbers are all over the board depending on which service you read about. But if the growth, as he says, gets America on that next track, and I happen to think he's on the right track with that, and it can pay for itself, he'll go down in history as one really, really wise guy that was persecuted the whole time. And do not think that I'm standing here blowing the words for Trump. He's got plenty of problems. A lot of these cases weren't over his business decisions. For us as Americans, they were over his private business, his personal life. You know, there's a lot of disgusting things. But there's also a lot of good as a businessman. It's not a Biden. It's a friendly business climate. I think that that's why you're looking at these markets up. And I think the best is yet to come. So just looking at charts, I'm not bearish. Can you get corrections? Of course. But these are longer term charts. It's going to take a lot to hurt these markets. On the energy, now remember what this is. This is the energy sector. This is the refineries, the transportation, the pipelines, all those type of things that make this up. This is bullish. This isn't bearish. This is still friendly unless you got back under over here, the 80.72 level. So I'm friendly that. I see the resistance as the 100-week average. It's an important number because after the market got over it, it found support against it. So on the way up, it becomes resistance. If you can clear that, why can't you go wherever that upper Bollinger Band is? In the dollar, on the weekly chart, I remain in the bear camp. How could you not? If you can clear not this week's high, last week's high, well, that would take me temporarily away, but I would make a big argument at 27.67 up to 28.09. These two numbers, the 200-week average and the 18, that's big resistance. Support, I would not tell one to go short into a Bollinger Band, and you're all of 20 cents away from it. Forget it. The gold market. Well, if you listen to what I gave you with the McDonald's hamburger, just as an example, Inflation's here. Now let's apply it to other goods that we're bringing in. You think cars are going to get cheaper to produce when we bring in these parts and they're 20% tariffs, 40% tariffs, whatever they are, if they're not made in America? There's a problem. What about the materials to make the car? I haven't heard us work out deals on steel and aluminum yet. Maybe you have. I haven't seen it, other than with the UK. And that part is still the part they claim they haven't inked. I don't know. Just back and forth right here. Copper, I have all the reasons to be very bullish. In Peru, there's another event taking place for the copper miners now. In Peru, which has many copper mines, big ones for the world, the locals have decided to block the roads to the big copper companies. They're doing it right now. And they want to go in and independently mine, legal or illegal. And why do those things happen? Because the government doesn't tax these companies enough to give it to the people, to keep the people under control. I know it sounds so simple, and it is, but it's the way it works. Higher lows, higher highs into the upper band. Why not be looking over here? I mean, let's face it. If Trump's spend tax bill works, we're going to come alive. If tariffs work out to the point where they're not onus enough to really stop everybody's economy, and we can spread whatever the tariff is between the manufacturer, the retailer, the wholesaler, how much of it hits you in the end? Those are the things you got to hope for, and that's what can spur markets like that on. Sorry, that's the end of what we've got there. So I wanted to give you my thoughts on the market. Haven't done that in a long time like this. Remember the 40% off? All I need to do is give you an idea, like I was talking here in copper. Maybe you can do something with that. 40% off any of the courses, any of the research. I'm Ira Epstein. Have a great holiday. I'll catch up with you all again Monday. You take care.